Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, into the action we go today on this Friday, November 1st, 2013. Markets are hovering slightly to the downside on the SPY, and there is an epic battle being waged here. And again, folks, take a look at what I'm about to show you. First off, markets are mixed. S&P's flat to slightly lower. NASDAQ is down 6. Dow is up about 22 points. So a mixed bag on the markets. But look at the level that this market is fighting to break down through. You can see it from the day of the Fed. So remember, Wednesday we got the Fed announcement, the FOMC policy statement. The markets had a nice little afternoon sell-off. The low of that day was right here. Yesterday we closed one candle below it, but never confirmed. Today, early in the day, we kissed that level, bounced, made a beautiful in spirit of bearish pattern, and then flushed again, making a lower low, but still there has been no confirmation of a breakdown yet. And again, if you don't understand what confirmation is, you're not alone. It's a proprietary key that only our members here understand who have taken our webinar, our Elite Keys to Unlimited Success webinar. So the key is that the confirmation signal is the only and unlimitedly best indicator when true breakdowns and breakouts occur. I mean, literally, there's nothing else out there that even comes close to showing you. And right now, we don't have it. So as much as I'd like to say, yeah, the market's in breakdown mode, we broke below this level, we confirmed below this level, I cannot say that. Okay, so right now, again, notice how you closed below, just like yesterday, you closed below the level, but there's been no confirmation, and the markets are trying to float back up. And the question is, do we confirm at some point today? If we confirm, that's a big deal, folks. All right, I want to tell you this right now. If you confirm to the downside below the low from Fed Day right here, this will be a major impact signal for this market, in which case I believe you will have anywhere between a 3 and 5% correction at least, possibly more. Kind of in line with what we've been doing lately. The only difference is that this next time down, after so many kind of ups and downs and buy the dip mentality, it could turn out to be a bigger one. But right now I think 3 to 5% is the smart move. All right, so again, that's what we're following here, folks. And again, we're watching very closely to see if we confirm to the downside. Right now, volume is getting very light as we get into the lunchtime session here on this Friday, and that's going to help the market. It's going to try to prop it up. The question is, can it prop it up? All right, so that's where we stand. We actually stand at an epic crossroads here. All right, going back to last week, I told members that by midweek this week, we would start to see weakness in the market. All right, most people, again, think I'm crazy when I make these calls, but they turn out to be right over and over again. And sure enough, Wednesday we saw weakness, Thursday we saw weakness, and today we're seeing a little weakness on Friday. This weakness actually should continue into next week, and therefore I actually do think eventually we confirm to the downside, although I want to see it in the charts as fact before I say, okay, we're definitely heading down. Okay, so that's what we're following here, folks. And again, the market's down 16 cents on the spiders. A little bit of a mixed bag with the NASDAQ down, Dow up. But again, S&P is the best indicator out there of the overall market, and that is hovering slightly to the downside. All right, and again, we'll watch very carefully. If we go to the daily chart, this is something I've been showing you guys for a long time. This major trend line stretching all the way back to 2010. High from 2010, 11, and then all the way through the highs this year. Now, interestingly enough, we've actually pierced the high here, but as I told our members, that does not constitute a breakout. Ultimately, you will come back in, and sure enough, look what's happening. Sure enough, come midweek this week, as I predicted last week, the markets have started to come in. So I expect, again, you'll have a little bit of buy-the-dip mentality all along the way, but I do believe you will continue to see some downside. Coming back, first stop will be right here. This will be your first stop right here, which is this former high pivot and the 20 MA. All right, I think by Tuesday, Wednesday of next week, we hit this level at least, maybe even sooner. And then you should get a little bit of a bounce. The key on that bounce is what you're going to watch for is, do we take out the high here, or is it just a small bounce, an inside bar bounce, which would be bearish, in which case you're looking for significant downside. Okay, so just a couple little tidbits to watch here, folks. A couple little tidbits to keep your eyes and ears open to. Now, there is a couple stocks out there I need to mention. First of all, it's one of the stocks that we own in the research center, and we are long on it, and that is J.C. Penney. All right, we bought J.C. Penney at $6.70, folks. We're still holding it. It's a beautiful consolidation pattern over the last couple days here above the 20. It's breaking up. It's starting to short squeeze. This is a thing of beauty. Thing of beauty. All right, we're in again at $6.70. It's right now trading at $7.94. We're nearing the 20% return level on this stock. And it's going to go over $8 today based on the squeeze. It is going to get over $8. Okay? So again, it might even get there in the next few minutes. But take a look at this move up. This is a squeeze. Notice the volume increase. These are people getting squeezed out of their shorts. We're long, and here it is, $397.97 just tagged as it continues to push up, and $8 is on the horizon. Oh, such a thing of beauty here, folks. All right, so literally in the last, we've held this for about a week and a half, 2 weeks now. We're nearing the 20% profit on that. We have other shorts that are in the money. We're just going to continue to do what we do, which is find good charts, put ourselves in the right position, whether it's long or short, and just make money. All right, so again, keep an eye on JCPenney. Trading here at $7.96 now, and this should easily puncture through $8, and it should actually pick up momentum, in my opinion, once it gets through 8. Although, again, I don't expect it to go too far through 8 today, but I think on Monday and Tuesday you could really see a beautiful squeeze higher as shorts start to panic as it shoots up. I actually think this goes back to around 965. I don't know if I'll hold that long because I'm up so much on it already, but the basis for the 965 target is that that's where Goldman did the secondary. So Goldman, remember that big secondary of almost $1 billion that JC Penney did. Goldman was the runner on that, and they did it at 965 when the stock was like at 12 or 11 or whatever it was at. And obviously, all those clients that bought that secondary are pretty pissed at Goldman. So generally, you'll see a stock go back to that level. Fascinating stuff, actually, to understand how that works. All right. So in any case, that's one stock to keep an eye on. A couple other stocks out there to watch. Let's take a look here. Let's go through a couple of the big names. Apple. Let's take a look at what Apple's showing us here. Apple is down $3.50 on the day. And as I just scanned through the charts here, you can see there's actually a bearish pattern. All right, this is what I said to our members right away. All right, I said this point blank to our members, folks. I said this is a wide range bar. Remember on earnings, it gapped up and then sold off by the end of the day. That's a wide range bar eclipsing. Look at this. All right. Literally all these days, all these inside bar days, all eclipsed in that one candle. That is unbelievably bearish. Unbelievably bearish. So these inside bars, all bearish inside bar action. That's a bearish in spirit of flag pattern starting to form. Now you're starting to trickle down. I actually think Apple goes lower. All right, well, if the market gets weak, it makes sense anyways, right? All right. One of the stocks we hit in the chat room today, just going over the chat room here on a Friday morning, I made a nice chunk of change on this one. The stock was VISN. All right, I gave the alert here on VISN right here at $7.20 when I saw a little bit of accumulation going on. It took off from $7.20 and went to $8.25 intraday, folks. Okay, most people who bought it sold over $8 for basically almost $1 gain on this. Tremendous one right there. I mean, there's just a plethora of action in this market, and that's what I love. I love the volatility. Another stock that's having a big day is First Solar, FSLR. This stock, take a look at this. All right, if you want to see, all right, how do you know that 59 was going to be the top today, or at least so far the top, and you got to pull back off that? Well, just zoom out on your chart. This is about as simple as it gets, folks. See this pivot high right here? Take a trend line, draw it across, and look at that. This is why if you don't look at charts, if you don't track trend lines, if you don't know PPT methodology, you're honestly leagues behind traders out there, and you're just going to continue to give up money. And that's what the markets are. Always remember that, folks. The markets are a transfer of wealth. It's a transfer of wealth generally to the institutions because they're more intelligent. They know more about the markets. They have computer programs that are going to always be, ahead of you in every aspect. They're going to push you to the limit in emotion, to make you sell at the lows, make you buy at the highs, etc. But honestly, you don't have to lose to the institutions. You can start taking it back. And the way you take it back is learn the PPT methodology, price, pattern, time. Easy to follow. Looking for a price on the chart, looking for a pattern on the chart, looking for a time factor on the chart. Those three align. Even two of those three, you're putting yourself with an 80% success rate. How do you think I bought JCPenney at the lows and I'm now up 20%? Okay? How do you think I've been short Facebook multiple times, about 3 times in the last couple months, and made money each time, even though the stock's trading at all-time highs, basically? All right, because when the triggers tell me based off PPT, I pull the trigger. And our members in the research center follow that. And they make money too. All right, literally up 300% net gain this year in the research center, if you've been following those trades. And with JCPenney, it's obviously more than that as well. Okay, so just some little tidbits there, folks. And let me just see if there's anything else. One stock of note here, JP Morgan Chase. Today it opened lower after a hard sell yesterday, right into the 200, reversed on the daily chart. And you can see right here, it's actually having a pretty good day. It's kind of consolidating here, but this stock's been beaten down while the other financials have done pretty well. All right, what other stocks are we watching here? One stock I am keeping an eye on because I think it's cheap, and with Penney squeezing, this is always a possibility. This TWGP, I did pick up a little bit today. I'm not sure if I'm going to hold it or not. It's only a small position, but I am watching this very closely down here at the lows. Very, very inexpensive, even though the company does have trouble. I'm going to keep an eye on this one over the next couple days. Again, I haven't decided if I'm going to hold it overnight yet or not as a swing trade. Earlier today, it looked like there was some accumulation, but if that doesn't pan out, I may move out and just look at it again on the Monday time frame. Okay? On that note, folks, I'm going to bid you farewell, but just be aware, folks, that the markets are awesome to trade right now as a swing trader and an investor and as a day trader. And if you are interested, there's a 7-day free trial here at InTheMoneyStocks.com. Again, Research Center is for investors and swing traders. Intraday Stock Chat is for day traders. Take care. Come join us here at InTheMoneyStocks.com.